of Money with Santosh Sirur.
Hello and welcome to another episode of The Sound of Money. Well, it's our second episode, and today we're going to talk about PMS or Portfolio Management Services as a product. A lot of us know about equity, mutual funds, and we have heard somewhere about PMS. But what is it that really, takes it to get into PMS, and what happens next is all about what we're going to get to know in the 15 to next 20 minutes. And joining me on The Sound of Money today, well, we have two guests. The first time we have two guests on the same episode. We have Poonam Narang joining us from Bangalore, and we have Arpit Agrawal joining us from Mumbai. Both are co-founders and directors at Electrum Capital. Well, they founded this very recently, in fact, in the midst of COVID. So I can imagine the challenges that they have, and they have been out of that initial phase and pretty successful at that. We'll talk about all that on this episode of The Sound of Money. Just in terms of introduction, well, Arpit, I know him. He's my ex-colleague from a previous bank, and he's the co-founders and directors I mentioned, but he's been into 15 years of experience and in the areas of equity research, into PMS, and of course, into business management. With him is his partner with Electrum Capital, who is Poonam Narang. And Poonam, well, she's skilled into PMS and has been a relationship manager all through her career. So Poonam and Arpit, very much welcome to the next hour episode of The Sound of Money.
Thank you, Santosh. Thanks for inviting us here.
Yeah. So
thank you for having us here.
Yeah, most welcome. And well, maybe we start off with Arpit. When the word PMS comes in, we all know it's something to do with the stock markets. But for an absolute novice who's never been, thought of investing, and who's been mainly a FD kind of an investor, or at max going on into mutual funds, what does PMS mean? And can you share a little more about what exactly happens when one invests in portfolio management services?
Yeah, great. So yeah, basics first. So Santosh, PMS is just one of the platforms for investors to invest into equities. So obviously, full forms first, it's portfolio management services. So there are different ways where investors can invest. I'm sure a lot of listeners are aware with mutual funds. There is an alternative investment fund, and there is this portfolio management services, right? So PMS is more like a managed account. It is basically a product which is for the high net worth individuals, wherein they come to providers like us to manage their money, more concentrated and a focused portfolio. Also, PMS allows to do a lot more customization on the portfolio depending on the client risk appetite, client profile, client interest. So it's a platform which is more like a managed account for the clients than more than like a fund, which is where everyone participates.
Okay. So you did mention about ultra high net worth clients. So is there any particular minimum amount that one needs to invest and go beyond? So maybe Poonam, this is a question for you. Is there some minimum amount that as a threshold?
Sure. Actually, Santosh, SEBI has mandated that for portfolio management services, the minimum amount or threshold is going to be about 50 lakhs. So that we have clients who can understand the risk that come along with this, and also understand that since it's a highly concentrated portfolio, as the returns can be exaggerated, so can at times there could be slides in the markets which they will have to withhold. So that's the reason there has been a differentiation made that it should be a 50 lakhs of a threshold that clients can come.
Okay. And then when it comes to PMS, I've been hearing these terms, right? Like a discretionary PMS or a non-discretionary PMS. So is it that the client has certain, rights to say where to invest, where not to invest, and what, and vice versa? How does that really as a process happen when one invests?
Arpit, would you like to take that?
Sure. So Santosh, there are two ways when you can manage money. One is discretionary. PMS is where the money is invested at the portfolio manager's discretion. So a mandate is defined by the client that the client wants us to invest in a particular way, maybe large cap, mid cap, certain sectors where he wants to avoid or he wants to take an exposure. But eventually, once the mandate is defined, the decision on a day-to-day basis on what stocks to buy, what weight to be taken is being done by the portfolio manager. And the client's reports are being shared with them on a on a monthly basis, and obviously review meetings happen on a very regular basis. The other way to manage, and for some family offices who have their own research team, who have their own fund management team, how they look at a portfolio manager is that, you give us ideas on the portfolio, and we would like to have the final discretion. So that's called non-discretionary, where the portfolio manager doesn't have a discretion. He would propose a portfolio or the ideas to the client, and the client eventually says a yes or no before that idea enters the portfolio.
Okay. So does it mean, and maybe Poonam, you can add on here, does it mean in case of a non-discretionary, as a client who needs to know a little more thorough understanding of the markets comparatively, because discretionary is more left to the firm to decide, right? Just like a mutual fund.
Sure, exactly. So the client is more well-versed in a non-discretionary portfolio, and he's a little more clued on. And as Arpit rightly said, they have advisors or they have a family office, and they would like that interaction. And sometimes they also give us certain mandates that they would like to be in a specific sector, and we can tailor make things according to that. So
okay.
It's a requirement.
Okay. So when it comes to opening a PMS account, right, a portfolio management account, how does that happen? Are there any prerequisites? Like, for example, the typical that one thing comes to my mind is about a demat account, for example, a broking account, for example. Vis-a-vis a mutual fund is fairly simpler, right? So what are the kind of basic requirements a client may need to really remember, keep in mind?
Yeah. So basically, we have a demat account that is open in the client's name. So that way, unlike a mutual fund, what happens is whenever the client enters into the portfolio, the shares are parked into his name, and all these demats are now held with a custodian. So which are one of the well-known banks, and we tie up with them so that there's absolute safety for the clients and his assets. And at the same point in time, all the funds are pooled together and invested across for the investors. So they don't need to open bank accounts, multiple bank accounts, because the funds are all pooled together at the fund level.
Okay. There is always any client will look at diversification from very much debt to an equity, and somewhere PMS does somewhere come in between, I guess, and there's more specialization. So what I wanted to know, I'm sure listeners are equally interested to know, is what are the pitfalls, if any? What are the challenges, if any, once goes in? Because the amount of investment, as you say, minimum is 50 lakhs and above. So the challenge is, right, it's entire someone's full wealth going into that whole bucket or that pot of whatever investment. So what are the pitfalls one needs to in either both discretionary as the non-discretionary portfolios?
So I'll take this up. Santosh, I think portfolio management is obviously a high risk product, right? Because one, the ticket size is larger, and second, obviously the portfolios are much more concentrated. Right? So I think something which an investor has to be cognizant about. So the risk reward are obviously a little more skewed than a more diversified retail product, and with a much more smaller ticket size. So pitfalls, could be when you run a concentrated portfolio with a very large amount of capital, from client's perspective and eventually from the portfolio manager's perspective. Obviously, there could be risks, which could be disproportionate. So in falls of the market, typically a concentrated portfolio, which will, fall more than the market, and vice versa. But my sense is, if you do it rationally, if you invest in good businesses over a period, it normalizes, and eventually it compensates for the risk the investor is taking.
Okay.
Also here, portfolio management as a platform allows us to do a lot more, as I told in my earlier comment, a lot more customization, right? So there are clients who would want to have a multi-asset class portfolio. You can actually wrap it around in a portfolio management services and provide. So it's just that equities. Obviously, large part of portfolio management is still in pure equities, but there are families who are running multi-asset class portfolios also under portfolio management wrapper.
Yeah, okay. An equally keen investor, a client may be very interested to know what kind of periodicity you guys as, firms, professional firms managing his or her portfolio come back and revert, and, how does that happen as a process? As in, they would be key because they would be seeing the ups and downs on all these business channels of the stock markets. And the question is, oh my God, what's happening to my investment? So what has been your experience in reaching out to the clients?
Poonam, you'll take it because you manage the client relations.
Yeah. So yes, a very interesting question. First of all clients who come to equities as a base, I always tell them, and I think that's what the industry also always makes very clear. Come with a long-term horizon.
Yeah.
Having said that, it does not mean that we do not keep in touch or do not, look at things because it's a passive investment. No, we try and do in the early stage. It's more often that the clients are held when the portfolios are formed within the first month, and depending, right, we might have cash deployment, we might sit on cash depending upon the market. So we try and connect more often with the client within a month's time and try and explain to him what we bought, why we bought, and after that the reports are fairly consistent, goes to clients regularly on a monthly basis. And they all have access to the digital world. Code has taught us that, and pace is really accelerated on that. But having said that, every quarter we try and do a review whenever required, and we also have regular con calls for clients for if there are events, and based on events, all the clients require is hand holding, right? So we try and connect with them as often as possible. We create a webinar, and if there is an important event, we discuss the implications on portfolio, and if required, we do go back and figure out whether we want to make any of the changes in the decisions. But largely it's all long term.
Yeah. And what is that definition, or it's too wider area to discuss in terms of long term, Poonam?
Well, it has to be with a 3-year plus horizon.
Yeah.
Of course, that's what we say, one market cycle. So 3 to 5 years is what you should have in mind. Patience is the key.
Yeah, absolutely. Absolutely.
Warren Buffett says that if you shut the market, he's more than happy. Although
True. Can you imagine?
Easier said than done.
Yeah. But apart from PMS, right, are there any other investment options available for clients? Or what kind of investment options are there in the market? Maybe to you, Arpit, to begin with.
Yeah, sure. So yeah, I think, now India is evolving, Santosh, as an investment destination. So, you've obviously been there, seen that. Earlier, and still the large portion of investments goes into mutual funds. That's the investment option. But I think, as we're getting more sophisticated, there is portfolio management services which are talking about. There are alternative investment funds which have various categories, category 1, 2, 3. We can probably in some later stage discuss them. Wherein, some of them invest in private equity, real estate, art. Some of them are long short funds, which basically play both sides of the market. They hedge the product. So that's also evolving landscape. Then there are investment advisory services. After the advisory regulations, now a lot of advisory services have come up. Also through some platforms like Small Case and all, it's become much more easier for retail investors to participate in varied advisory services. So I think India is evolving, and obviously there are angel funds, and there are startups, and there are unlisted equities which gets traded. And we have a small distribution outfit which does some of like-minded products. There are products which have come up on the real estate side. So it's a varied bouquet, and I think it will evolve. I think we are still at a very nascent stage of development in terms of financial products, because first love of Indian investors has always been gold and real estate. So financial products are now evolving. Last year was actually, I would say, we call it that J curve. It was a year where people just jump into financial products, and everybody tasted that. I think 4.5-5 crore new demat accounts is something which is big. It's always happened globally, but I think for India, which is a country which is more clued on to hard assets, I think it's very interesting to see a lot more new investors coming in the market.
Absolutely. Yeah, absolutely. I agree with that. Electrum Capital, you guys forayed into this, started this with a vision, a dream, literally in the midst of COVID, right? As Poonam was telling me before we went on air. How was that decision? That's one. And then if you look back in hindsight, where are you guys?
Yes, Santosh, we started at a time when everyone was like, you guys really want to start now? Like, we don't know what's happening next in life, and you want to start a venture today. So it was quite a brave move at that point in time. But in hindsight, I think it was absolutely the right move, because Arpit and me always discussed this, and we felt that there was a need. There was working across MNCs and last instance with Indian firms. We always felt that there was a great need in the market for boutique professionally management service. Okay, they really wanted. There was a need where you needed managers who could see what's coming next and handhold you through market cycles. Because this was one of the toughest periods in history that we've seen, or our grandparents have also not seen. And how do you tackle? All you could do is speak and speak as much as you can. So I remember when we started out the firm, and before we even started out completely, we used to have n number of calls, actually more number of calls than we do today. Every day we used to speak out, reach out to clients, and it used to be like probably 8-9 Zoom calls a day, right? Because the whole thought process is, how do you make the client stick to his decision in a tough time, right? And if you have to do changes, how do you go by it? So we felt that the need was so great that you need a professionally managed hand to see what's coming next and hold you through that journey. So, Electrum, when we started, the name of the firm also signifies it's an alloy of gold and silver, and it is today used to in a Nobel Peace Prize.
Yeah.
So the thought process was, can we create that excellence of customer service, customer centricity? What can we do towards that? So when we started out the platform, we thought that, hey, why not our clients be our marketers? What can we do good? And that's how it has been. We're very proud to say that we started out probably with 0 assets. Today on the portfolio management service, we are 120 crores in a span of a year. And all has been through our clients who've been with us in the journey past. And now they're also, referring their friends and family, because they've seen that how we've handled the crisis. And, it's not that one can also say that market has been upward from there. But also through that journey, they required a lot more of communication. And that's what we brought in. We're a team of, say, 2 people. And today we are a team of 12. We were located in one location. Now we are multi-location. We operate out of Mumbai, Bangalore, Indore. So it's been phenomenal. We have a fantastic team. We have driven people, ex-bankers, worked in various MNC organizations, joined us with pay cards, but with dreams in their eyes, and said, we want to build something with passion. And that's where we are. We run 2 businesses. One is the portfolio management service, which Arpit runs. And it's about taking small and medium-sized companies and adding them to the client's portfolios. It's called the Electrum Laureate strategy. So over there, they find all the hidden gems across Indian markets and work and spend time and hope that they're leaders of tomorrow. That's what we do. And we also run something called customized portfolios, there where we have larger clients and family offices. And like the PMS that we spoke of, or the required advisory, we handhold them through that. And on the other side, we have one more business, which is on the wealth distribution, which you spoke about on the asset classes. Because what we realize is clients, besides equity, also require other asset classes that they would like to park their wealth in. And since I've been a private banker all my life, this is very close to my heart. So we said, on this platform, can we get something new across asset classes? So we deal in debt, which is debt, equity, real estate. Across on the real estate, we do some unique products, like a fractional real estate is what we bring on the table, so that clients have access to various markets across India. We do unlisted equities, which otherwise, clients do not get them off rack. We do long and short funds, which provide stability in a market where, the fund manager's first dharma is, can he protect capital? So we address that. So that's what we bring on our platform on the wealth distribution, which is besides the mutual funds and bonds, which are regular products. So yeah, that's where we are. And the journey is unfolding. It's fun.
That's interesting. So Arpit, as Poonam was saying, you both have actually, if you look at it, right, absolutely motivating for a bunch of our listeners who would love to get into it and, start their own firms, private equity, or whatever that it could be, right? What have been your challenges? It's not been an easy game, I'm sure, but what are the challenges, and how does one stay afloat and, stay the course? Anything that you would love to share, Arpit?
Oh yeah, I think, being an entrepreneur and trying, I think this is my second venture. I think few things you have to get right if you're trying to get into a venture. I think the most important thing is whom you're trying to work with. I and Poonam always discuss that it's first of all, we both should be exactly on the same page. We spend a lot of time discussing a lot of things under the sun, before we even sign the dotted line to start the venture. Because that is something very, very important.
Yeah.
If you are not on the same page on most of the things, I think it becomes very, very challenging. And touch wood, I think that has worked out really, really well. Second is, when you're doing a venture, I think you have to think a little long term. The biggest mistake which people do is that they start a venture and they start looking out for capital and people, and it just within 6 months and 1 year it becomes like they thought the fund would be raised. So when we started, we were very clear that two things will be very important. We should have the capital. We should have the right people. We identified few of our core people even before we started the firm, which will be there at least for 1,000 days. So the 1,000 days principle in a venture, right? So you should be there on the pitch at least for 1,000 days.
Yeah.
So that is what is very, 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 very clear from day one, that you have to be around. You have to have enough capital. Second is cost. I think any new venture, you have to be very, very cognizant of cost.
Yeah.
Because cost is reality and revenue is vanity. So everybody knows that.
Yeah.
So when we started off, we never knew how things will pan out, and we started in the midst of COVID. So that is something which, as a venture, you should be very, very careful of, and we are still very, very careful about that. And I think third is and which really worked for us very well is that what is your focus? I think for us, client is the center of everything. We really live that by that mantra. Our business is not to get more fees and get more revenues and get more assets. From day one, can we create value in the client's portfolio? If we'll do well, if we'll perform well, if we'll keep on creating value over a period of time, we will get assets, we will get revenue. That is a byproduct. And that is ingrained in both of us from day one. We always discuss that day in, day out, and that has really worked well. And for that, you have to be around. So, you don't have to be a 1 year stint. It has to be a 5 year stint, and then automatically things will fall in place.
Absolutely. It's a big life. Life is, it's like a relay race, right? It just goes on, and success always comes through. Well, absolutely. Poonam, Narang and Arpit Agrawal, co-founders and directors at Electrum Capital. So much thanks for joining us on this episode of The Sound of Money. Glad to have you, and all the very best for your venture. Long way to go, and I'm sure amazing days ahead for you. All the very, very best to you.
Thank you, Santosh. Thanks for the opportunity. And it was glad speaking to you. Thank you.
Thank you so much, Santosh. Thanks for having us.
Thank you. Well, we'll come to that end of the second episode of Sound of Money of year 22. Lot more happening coming in the coming weeks, months, and years ahead on the Sound of Money with me, Santosh Sirur. For now, take care and bye for now. Bye-bye.
Sound of Money with Santosh Sirur.